So I also have a very small amount in what I call funds, okay, investing in country growth. Country growth. So currently now I'm actually quite bullish in two countries. One is China. China. Why am I bullish in China? Because I believe that the government will use the stock market as one of the initiative to prop up the economy. So of course I'm quite sure you know that now China is actually not doing very well, and their real estate is actually in doldrums. So in the past, one of the reason why China has been developing so quickly, has been growing so fast, is actually because of real estate. So they have been developed very quickly. So of course I'm not saying that's not the only reason. So real estate market has one of the reason to prop up. So of course the real estate market is now not doing very well. I believe China, okay, definitely China still has the power, especially in terms of the government perspective. China is actually still very powerful. China is actually still very rich. I do believe that the current economic, I don't know why I call it not so good, is going to be temporary. So eventually, the government will actually take a few initiatives to prop up the economy, and I do believe that they will use stock market as one of them. So again, this is just another belief. So what I do here is this. I actually use funds to invest in China as a whole rather than pick companies myself. So end of the day, my capabilities are limited, my time is limited. So for me to really go into a new market to understand them, to pick stock, it will take some time for me. So basically, I don't just like to do things blindly. It will take some time for me. So I for China so far, I'm actually still depending on funds. So in terms of stock pick, I only look at US and Singapore market. So other countries I use funds. So China, I'm actually using funds. Okay, by the way, anybody don't know what's the difference between mutual funds and ETF? If you don't know what is it, please tell me type a 0. If you know the difference, please tell me type a 1. Okay, difference between funds and ETF. Okay, quite a few. Okay, now, so basically funds are, you go to the bank and buy lah. Or either that you go to platform like Fund Supermart. So what are funds? So funds is basically like, for example, I'm a fund manager. Okay, I collect money from you. So let's say I sell my fund, Chuanmin Fund. Okay, you can buy units of the fund. Then after I collect the money from you, I go and buy a basket of goods, basket of stocks. So let's say, for example, I create a Singapore fund. So I collect money, I actually take the money, go and buy 30 Singapore stocks, for example. That is a fund. Okay. Now, some of the funds, most of the funds you buy over the counter. Okay, you buy over the counter. You go to the bank and buy. You go to the brokerage house and buy. You buy from an insurance agent. You buy from a financial planner. Okay, so these are the funds that are actually being sold over the counter. Okay, there are certain funds you can buy from the stock market. So by the way, if you can buy from the stock market, you cannot buy from over the counter. So they are differentiated. So there are funds. So the main difference is the distribution channel. Okay, one of the main difference is the distribution channel. So if I create a fund, I can decide to sell through the stock market. Okay, then it can only be bought and sold through the stock market. I can also create a fund and sell to what we call over the counter. Then it can only be bought and sold through the banks, through the financial planner. Okay, so that's the main difference. So basically, like for example, I can have a China fund that is being sold over the counter. That means I have to buy the banks. I can also have a China fund that is being sold over the stock exchange. Okay, so that's the main difference between a fund and an ETF. Okay, now the second main difference is this. A fund, usually there's a fund manager, there's a physical person that decide what are the stocks to buy, what stocks to sell. Whereas for ETF, most of the times index based. Okay, they just follow indices. Like for example, Singapore, one of the most popular fund is STI ETF. Okay, there's nobody to decide what to buy, what to sell. Okay, STI got 30 stocks, just invest in that 30 stocks, full stop. So personally, ETF is cheaper lah. In terms of the expenses, ETF is a lot cheaper than funds. Why? For obvious reason. ETF, there's no fund manager. Uh, Funds, you need to pay for the fund, and then you have to pay a physical person. Okay, but personally, I'm actually using funds to invest in China. That means I'm not buying ETF, I'm buying through Fund Supermart, FSM1. Okay, reason is because I can do RSP, okay, regular saving plan, whereby I can, like, just tell them, okay, every month help me to invest $100, $200 in this particular fund. Okay, I can set this instruction and then they will just do it for me lah. Whereas if you actually want to do RSP on ETF, I'm not sure whether they can. Even if they could, the fees is actually going to be higher. So let's say you break down in terms of hundreds, right? Okay, I think the fees actually going to be higher. Whereas if I do RSP using funds, is actually more in terms of fees, right? In terms of the buying fees, is actually going to be lower. Okay, so this is what I do. I have, again, a little bit of money in China fund. I do a RSP every month, just go and buy. Okay, these are all for like 5 years, 5 years objective lah. Hopefully 5 years later, then China actually do prop up, then my funds will benefit. Can the other country I am interested in is Vietnam. Vietnam. And the reason, as you can see here, so again, I asked ChatGPT, rank Asian countries based on the expected GDP growth. You can see that among our ASEAN countries, Vietnam got the highest, 6 to 6.5%. So again, you can actually get Vietnamese funds via Fund Supermart. Or if you want, you can actually just go and do a RSP lah. So yep, so this is my long-term growth investing strategy, whereby, again, don't forget the objective is what? How many years I'm expecting? After I buy, I'm expecting to hold for how many years? Okay, let's see whether you catch the main point. Okay, it takes about 5 years for me to get the return one. It's not I buy today, hopefully tomorrow I can make money. No. Okay, when I buy, I'm prepared to hold for 5 years, but of course I'm expecting 100% return over the next 5 years. Okay, so this is 20% my funds are actually doing that. Okay, this 20%, that's what I'm doing, buying the stocks. Park there 5 years, hopefully 5 years later things will come my way, I get at least 100% return. Of course, there are cases whereby 1 year I get back already, very happy. There are cases whereby 3 years I get back, very happy. There are cases that 5 years later still don't move. There are cases whereby buy already, I'll lose all my money. Okay, so it happens. It happens. High risk, high return. This is the name of the game lah. If you want to play, if you want to go and play boxing, you have to get hit lah. Correct, right? Don't tell people that, I want to play boxing but I don't get hit. Then of course, then cannot play the game. Also, this is the exact same game as well. If you want to invest in those stock, then you must be prepared to lose money. Okay. So summary for this part. So again, it's high risk, and a lot of time the risk is there's actually no history of success. Okay, take for example Raffles Medical. They go to China. Have they been to China before? No, we don't know. Can it be successful? We don't know. So whereas in Singapore, they know that for the past 10 years, Raffles Medical has been very successful in Singapore. Next 10 years, very likely is going to be the same lah. Correct, right? So let's say, for example, Raffles City Shopping Mall. Past 5 years have been doing very well. I'm quite sure it's quite safe to assume that next 5 years is also going to do well. But for going to China is something new. We don't know. If you ask them, they also don't know. Are they going to be successful? No, I think they also say they don't know. Okay. So yep. That's why it's high risk. So please, if you do that, please also mitigate the risk. So diversify. So same thing lah. I don't invest in one growth stock. I also try to have a portfolio of growth stocks. So same thing. If you can hit about 30, that'll be great. So same thing, diversify. Invest with money that you can afford to lose. Like in my case, I invest in money that my wife don't even know that I have. Okay. And of course, must be very clear on your investment objective lah. Your investment objective must be for bonus purposes. So what do I mean by that? So basically, the only reason why I go into growth is because I know that, hey, my income about there already. Okay, my income more or less can help me achieve my objective. Uh, so it's just that I can afford to invest a bit more to accelerate my objective. So must be very clear lah. Okay, please don't go and go for the sake of gambling lah, or take risks for the sake of taking risks. So hopefully that point is very clearly brought across. Okay, Chinese Vietnamese fund, yes, they are denominated in SGD. Yes, you can denominate SGD, correct. There are still going to be forex risks, definitely, because after they take money from me in SGD, they have to convert it into their respective currency to buy the stock. So there will always be forex risk.